My name's Marylen Edwards. I'm Director of Mortgages for MT Finance. I'm here today with
Jeni Browne, Business Development Director at Mortgage Finance Brokers.
We're here to look at the specialist market and discuss what's happening, good and bad, and how, from a broker's perspective, Jeni is finding the market. So thank you for your time today, Jeni. We're here to look at the specialist market and how it's changed over the last sort of 12, 24 months. What do you see as a significant change in the specialist sector, or what are you seeing?
Yeah, so particularly in the buy-to-let space, I think there are so many headwinds for landlords at the moment. There's so much going on in terms of interest costs, legislation changes, taxation, all this kind of stuff going on. And then you've got the broader economy, there's concerns there as well. There's lots of kind of challenges. And I think what we're really seeing from our clients at the moment is a bit of a shift in terms of investment strategy. I don't know if you're seeing that here at MT Finance as well. So definitely people are starting to, more so than normal, because who isn't looking at yield? You wouldn't be investing if you weren't thinking about yield, but yield is becoming ever more important. And I think the other thing we're certainly seeing a notable shift towards at the moment is certainty. So by that, what I'm talking about is things like corporate lets, particularly to things like Serco, like the housing associations, those kinds of things, where I think some landlords are just saying, you know, there's too much uncertainty in the world at the moment. I just want to know that I'm going to get my rent every single month guaranteed, you know, and take some of the concerns away.
Yeah, agree. We're also seeing a lot of landlords diversifying their actual assets to maximise rentals, so changing to HMOs, yes, smaller MUFBs, even dipping into commercial side, into the semi-com to get experience.
Yeah, it's interesting, isn't it? Because for years, a lot of landlords wouldn't touch commercial with a barge pole, but there definitely seems to be more of a trend that way now. I don't know if they're just seeing it as more of a kind of, because the tenancies tend to be longer, more certain rents, whether the yields are maybe a bit more appealing. I'm sure there's lots of reasons, but we're definitely seeing things go that way.
Yeah. What downsides are you seeing from a broker's perspective?
In terms of the challenges landlords are facing, I think for landlords it's really difficult at the moment. So we're speaking to hundreds of landlords, and I think at the moment they're just a bit peed off, to be honest with you. So there's a lot of people that are sort of maybe mooting selling properties, whether they actually do or not, because it's actually quite hard to sell a property at the moment. But I think a lot of them are thinking, do I really want to be in this space? Others are actually changing their strategies that we've just talked about. So there's a lot of people who are just kind of, I think, biding their time, trying to make the decision about their next move, really trying to sort of make a good decision. But I think that's very hard because there is so much going on at the moment. So I think that's really tough for landlords, actually, investors more broadly as well.
Do you think, or are you seeing a lot of clients with more sort of adverse, quirky credit history?
I am, because I always come to you about them. We are. Do you know what? In all seriousness, you go through, I think, phases, and sometimes you won't get a single credit decline for a really long time, but there certainly seems to be more people, not necessarily with really kind of horrific credit files, but actually certainly more blips coming across our desk. I don't quite know. I think people are just maybe more stretched. Struggling, we all sort of feel to some or lesser extent the weight of the cost of living increases, and I think people are finding things more challenging. And I think as a lender, you must be very cognizant of that, maybe watching your books to see if things are kind of starting to take a more negative turn in terms of performance. But yes, certainly there's been a notable uptick, I suppose, which is really kind of where, as at MFB, we're certainly leaning more towards the specialist end of the market. And specialist lenders, I don't know how you would feel about that term, specialist lender, because I think some people just think adverse lender, which it's not, is it? Yeah. But we're certainly seeing that actually we're really, really pleased to be able to have those specialist lenders in the market who we can really turn to as both the landlord profile and also their investment decisions start to really change. And people like your BM Solutions, they are great, they serve a purpose, but they're not scooping up those kinds of landlords who really need some specialist help.
Yeah, no, I agree. And sometimes the blips, they just don't make common sense with a portfolio, and there needs to be sometimes a view or consideration, not computer says yes, computer says no.
That's what's really worrying me, I think, at the moment. All we're hearing about is AI. and how, all mortgages are going to be underwritten by AI and all this kind of stuff. And I absolutely see there's a part for it, but actually, as most client situations are not super straightforward. I mean, maybe as brokers we tend to attract more complex borrowers, but actually there are so many people out there who don't really fit with a kind of algorithm. You do need a lender who can pick up a file and make a really common sense and commercial based decision based on everything they're seeing. And MT Finance, I'm obviously going to say nice things about you, I'm sitting here talking to you, it'd be weird if I didn't, but actually that's where some lenders, particularly MT Finance, but there are other lenders as well, that really come into their own, because actually most people don't tick boxes 100% of the time.
No, thank you. Nice to hear. Obviously, we've just launched into the commercial space.
Yeah.
You yourself dabble with commercial mortgages. What's the most popular type of commercial transactions that you're seeing?
Yeah, so at the moment, there's definitely semi-commercial is where people are sort of heading towards. I think the reasons people are particularly liking semi-commercial, I think there's a range of reasons. I think it's the stamp duty, the Section 24 taxation not applying necessarily, or at least part of the building, and also for some investors, I think it's probably the potential for development in the future as well under PD. So I think people have got their own reasons for going down that road, but certainly semi-commercial is on the way up.
Yeah, we've certainly, since we've gone full semi-commercial, not just the residential part, we've seen an uptick massively in applications and people coming forward for.
Yeah, but it was interesting that you guys went into semi-commercial actually, because I think we all know that the sort of high street banks are really there's just no point going to them for semi-commercial, even commercial these days, and the challenger banks have kind of come in. So it's really fantastic to see another player come to the table, and you guys are obviously sort of looking to try pushing things, which is fantastic. But it must have been quite a big decision for you as a lender to go into that space.
Yeah, we did. We looked. Obviously, I've had quite a diverse career, so I worked for the very end of the specialist side and the niche banks, and being a broker myself. Yeah. And there was a need for someone to sit in between the end of the market in the specialist term and I suppose where the banks sit, and whilst we're not rate driven, we can look at things in a bit more granular, take a common sense view, but we sort of sit in the middle, so there is a conduit between the banks saying no and suddenly paying 12%, 10%, depending on your LTV. And we aim our service. So service has always been important for MT, speed of completions, transactions. So we will, again, not take the 4 to 6 months that a bank takes to complete on a deal.
That's recorded.
we won't. This is our aim. So, I mean, we will plan, and our aim is to get it over the line as quickly as possible. We have a good relationship with our solicitors. We have a strong completions team, and we're proactive, not reactive. And once it gets to the lawyers, we don't just leave it there. Yeah. So we will offer the service as opposed to being not able to offer the rate, but there is definitely a conduit to sit where the banks can't help and the other end of the market. And hopefully from the inquiries we've had, we've made the right decision.
Yeah, I think you have. I think it's a really good time to go into that space. There's certainly a lack. I think some of the guys who kind of came in and plugged the gap after the credit crisis, they've done really, really well, but they've become so big. They're not really in charge of their own destinies anymore. The service is at times questionable. So I think it really has been a really fantastic time for you guys to come into that space.
Thank you. Looking ahead to the next 6 to 12 months, where do you see the market going, and where do you think there will be a need for brokers to help borrowers? What sort of sectors do you think that borrowers will need a broker more?
I think the next 6 to 12 months are going to be challenging. I think the biggest challenge that we have at the moment, and I think actually the thing people probably don't pay enough attention to, is politics, both the UK and broader, and the impact that has on the mortgage industry. And pricing is actually really kind of driving a lot of things at the moment in terms of criteria because of rental calculations, and then also investor decisions. So that's really, really important. I think the next 6 to 12 months, we're going to see a lot of shifting from the lenders in terms of leaning towards AI. Everyone seems to be talking about AI at the moment, which is fantastic. I think there's definitely a space for it. I think it's really important that particularly great lenders like yourselves don't get swept away with that train and keep doing what you're really, really fantastic at. I think that's really important. In terms of investor strategies, I think we are going to start seeing the buying market start to pick up now. I think a lot of people have been listening to the news and hearing that house prices are going to take a tumble and mortgage rates are going to come down, and we all know that actually mortgage rates don't have much further to come down this year, if anything at all. If you're looking at fixed rates, we kind of are where we are, and I think there's a lot of people who are looking to make their next investment decision, but they've been just kind of waiting to see what happens. But they're going to eventually, people get bored and itchy feet, don't they? Want to get on with their business, so of course they're going to start doing stuff. So things are going to start to pick up in the year. I think in terms of what people are going to be looking at investing in, it's going to be more of the same, so high yielding assets, semi-commercial, and definitely sort of refurbs as well. We're seeing a definite uptick in refurbs.
Yeah, we are as well. A lot have been buying at auction, or a lot of older houses that need the work. We're obviously bridging, and then we're taking out the bridge at the back end. So yeah, definitely on that, especially with the EPCs getting ever closer as well, and people having to do work. I mean, that's a route that's just naturally going to happen. Yeah,
it'll be interesting to see. I think we've got the Renters' Rights Bill, haven't we, in the autumn to come through as law, and then we're going to have to see how that all sort of shakes out. The EPC dates keep getting moved, but I think landlords are sort of accepting of the fact now that this is actually going to happen, and you know, they need to do something. So there's going to be a lot of kind of focus on that as well. But yeah, I think as a kind of mortgage broker, for us, we're just kind of hoping that the next 6 months are kind to us. Hopefully we see a kind of softening in mortgage rates. I don't think it needs much to get the market really going now, but I think people are still waiting to see what happens. And it will be interesting to see what happens in terms of regulation. So we're seeing all the news about the loan to income changes coming out in the residential space, which is not my space or your space, but we are seeing that, and it certainly kind of, I guess, puts a kind of stake in the ground, doesn't it, for in terms of other regulatory requirements and what else might be looking to change going forwards, and how that can then further serve the investor market as well.
Yeah, I mean the buy to let, the rent change covers, the 125, the 140, it was brought in when base was 0.5 to protect rates rising. Well, rates have risen. We haven't had an arrears escalation of any kind. But landlords are now being penalised twice by that rate, that ICR still being there, and the rates being higher. So you're right. It hopefully it will flip into the buy to let. It doesn't need to come down by much. Maybe down to 120. 115, I can remember when it was 110 at pay rate, but just to give the landlord some sort of movement.
Yeah, I think that'd be really useful, and actually the fact you're even thinking along those lines is really encouraging. And as a lender, it must be really frustrating, like you're kind of hamstrung by sort of regulatory requirements, which we all know are there to protect people, but sometimes, well, as we're seeing now with the kind of movement on the loan to income calculations, maybe things have just gone a little bit too far. Maybe lenders should be allowed to make more of their own kind of, you know, grown-up decisions based on their own loan books and what they're seeing is from their experience.
Or even the PRA, the FCA, making that change because it served its purpose. And we're not asking for it to go away, but just a little bit of leeway would be nice. And I think it would really kickstart the market and drive the market a bit more as well.
I think you're absolutely right.
Thank you for your time today. Thank you for coming. It's
Lovely
been lovely to see you.